Have you ever wondered what Bitcoin halving is? Well, to understand that, let's first dive into the fascinating world of Bitcoin. Born out of the digital age, Bitcoin is a decentralized cryptocurrency free from the controls of any central authority. Now, you might ask, how does one get their hands on Bitcoin? That's where Bitcoin mining comes into play. It's a process where powerful computers compete to solve complex mathematical problems, and in return, they get rewarded with Bitcoin. The decentralized nature of Bitcoin provides a level of transparency and security that's truly revolutionized the financial world. It's like the digital equivalent of striking gold. But with a twist, the gold here is not unlimited, it's capped at 21 million coins. But here's where it gets interesting. Every 4 years, something called Bitcoin halving happens. Sounds intriguing, doesn't it? So what exactly is this Bitcoin halving? Well, imagine a gold mine where every 4 years, the amount of gold extracted is halved. That's Bitcoin halving for you in a nutshell. It's a built-in feature of Bitcoin's programming to control the supply of coins, and it happens roughly every 4 years. Now let's delve a bit deeper. Bitcoin transactions are bundled into blocks, and these blocks form the Bitcoin blockchain. The miners who verify these blocks are rewarded with Bitcoin. This is how new Bitcoins are brought into circulation. But unlike traditional currencies, Bitcoin has a finite supply. There will only ever be 21 million Bitcoins in existence. This is where the halving comes in. Every 210,000 blocks, or approximately every 4 years, the reward for mining is halved. So miners receive 50% less Bitcoin for their efforts. This is what we call a Bitcoin halving. Why does this matter? Well, it's all about supply and demand. By reducing the rate at which new Bitcoins are generated, the halving aims to mimic the scarcity and deflationary properties of precious metals like gold. This process ensures that the total supply of Bitcoin will never exceed the magical number of 21 million coins. But it's not just about scarcity. Bitcoin halving also helps control inflation. If new Bitcoins were constantly flooding the market, their value could decrease. But by systematically reducing the supply, Bitcoin halving helps maintain the value of the currency. In the grand scheme of things, Bitcoin halving is a testament to Bitcoin's innovative design. It's a mechanism that, while simple in concept, has profound implications for the currency's long-term stability and value. And it's a process that sets Bitcoin apart from traditional currencies, which can be printed without limits. So, when we talk about Bitcoin halving, we're really talking about a fundamental aspect of what makes Bitcoin, well, Bitcoin. In essence, Bitcoin halving is like a systematic slowing down of the money printing press. Now you might be thinking, what does this mean for Bitcoin miners? Well, let's dive right into it. Imagine being a gold miner and one day, the amount of gold you get for your hard work is cut in half, while the effort you put in remains the same. That's essentially what happens to Bitcoin miners during a halving event. The reward they receive for solving complex mathematical problems to verify transactions and add new blocks to the blockchain is halved. This means that the incentive for miners is reduced by 50% overnight. Now you might wonder, why would anyone continue to mine under these conditions? Well, there are a few reasons. Some miners have faith in the long-term value of Bitcoin and believe that the reduced supply will eventually lead to an increase in price, making their efforts worthwhile. They're playing the long game, banking on the principle of supply and demand, but it's not all smooth sailing. The halving can also lead to an increase in the difficulty of mining. This is because the number of miners competing for the same rewards can increase, especially if the price of Bitcoin rises. More competition means it's harder to be the first to solve the problem and claim the reward. This can lead to smaller or less efficient miners being pushed out of the market, leading to a consolidation of mining power in the hands of a few. Of course, there's also the fact that mining is an expensive operation. It requires significant computational power and electricity. With the halving of rewards, the cost of mining can become unsustainable for some, especially if the price of Bitcoin doesn't increase enough to offset the reduced rewards. In conclusion, the Bitcoin halving event can have a significant impact on miners. It can affect their rewards, increase competition, and potentially make mining unprofitable for some. However, those with a long-term perspective may see it as an opportunity to invest in a resource that's becoming more scarce. So, Bitcoin halving can be a bit of a double-edged sword for miners. It's a complex process with far-reaching implications, and only time will tell how it shapes the future of Bitcoin mining. But what does Bitcoin halving mean for the rest of us and the market as a whole? To understand this, let's first imagine a world where gold becomes twice as hard to find overnight. Miners would need to put in double the effort for the same reward, and the rate at which new gold enters the market would decrease. This scarcity could drive up the price of gold, and Bitcoin halving operates on a similar principle. In the lead up to a Bitcoin halving event, there's often a great deal of anticipation in the market. This is because the reduced supply of new Bitcoins entering the market can create a scarcity effect. If demand remains constant or increases, this scarcity can put upward pressure on the price of Bitcoin, potentially leading to a bull market. However, it's important to remember that markets are complex and influenced by many factors. While Bitcoin halving events have been followed by price increases in the past, it's not a guarantee for the future. The crypto market is notoriously volatile and unpredictable, and Bitcoin is no exception. But Bitcoin halving isn't just about price. It also plays a critical role in creating a deflationary economic model. In traditional fiat currencies, central banks can print more money when they see fit, leading to inflation. Bitcoin, on the other hand, has a maximum cap of 21 million coins. This cap, combined with the decreasing rate of new Bitcoin production, creates a deflationary effect. This is a key aspect of Bitcoin's design that sets it apart from traditional currencies and makes it an attractive store of value for many investors. In essence, Bitcoin halving events serve as a reminder of Bitcoin's scarcity and deflationary nature. They are integral to Bitcoin's economic model and can have a significant impact on market dynamics. So, Bitcoin halving can be seen as a powerful catalyst for market movements. With all this in mind, what could the future hold for Bitcoin? As we look ahead, Bitcoin's potential seems to be as boundless as the galaxies. The long-term implications of Bitcoin halving are rather fascinating, and they could significantly contribute to Bitcoin's longevity. This ingenious mechanism built into Bitcoin's protocol ensures that the total supply of Bitcoin will never exceed 21 million coins. This artificial scarcity mimics the deflationary properties of precious metals like gold. Just as gold has held its value for thousands of years due to its scarcity, Bitcoin could potentially follow a similar trajectory, maintaining its value over time and perhaps even increasing it. Each halving event slows down the production of new Bitcoins, and as we approach the maximum limit of 21 million coins, every single Bitcoin will become increasingly valuable. In fact, some experts believe that as the supply of new coins decreases and demand continues to rise, Bitcoin's price could skyrocket. But it's not just about the price. The deflationary nature of Bitcoin could make it an attractive store of value in the long run. As traditional currencies are subject to inflation, which erodes purchasing power over time, Bitcoin could serve as a hedge against inflation, much like gold has done over the centuries. However, it's important to remember that the world of cryptocurrencies is still relatively young and volatile. The future of Bitcoin could be influenced by a multitude of factors, including technological advancements, regulatory changes, market dynamics, and even global events. Will Bitcoin become the digital gold of the future? Will it become a universal currency, accepted worldwide, or will it remain a niche asset for tech enthusiasts and investors? These are questions that only time will answer, but one thing is certain: the process of Bitcoin halving will continue to play a crucial role in shaping Bitcoin's future. It's an integral part of Bitcoin's DNA, designed to control inflation and maintain scarcity. Who knows what the future holds, but one thing is for sure: Bitcoin halving will continue to play a crucial role. So, to recap, we've delved into the intriguing world of Bitcoin and how it operates. We've discovered that Bitcoin halving, an event that takes place approximately every 4 years, is a fundamental part of this ecosystem. This event cuts in half the reward that miners receive for verifying transactions, effectively mimicking the scarcity and deflationary properties of precious metals like gold. We've also seen how this halving impacts miners, reducing their Bitcoin rewards and potentially influencing their willingness to continue mining. Yet this very mechanism also plays a pivotal role in market dynamics, creating speculative bubbles and impacting Bitcoin's price. Looking ahead, Bitcoin halving will continue to be a key player in Bitcoin's future, ensuring that its total supply will never exceed 21 million coins. And that, my friends, is the fascinating world of Bitcoin halving. Until next time, keep exploring and keep learning.